our speaker tonight is, of course, our own Richard McDonald. And as I was taking my shower this morning, Richard, I was thinking to myself, isn't it interesting that our economic system, which evolves around capitalism, capital meaning that capital is invested in organizations, that's the very process that we follow. But concurrently, we need a shareholders association to protect the very rights of the people, which are the investors into the corporations themselves. So I'm hoping in tonight's discussion, you will address that interesting anomaly. And I'm sure that you've been asked that question in the past. So rather than spend a lot of time introducing the topic, I'm going to just turn this over to Richard, our own Richard McDonald, and have him talk about what he does. But I'm also interested in how someone is led into this area of interest. So Richard, you will be addressing us tonight. We're very grateful for that. And I'm going to turn it over to you. And Richard will be addressing us for 30 to 35 minutes, and there will be ample questions for Q&A after. So Richard, I'd like to turn it over to you for your address this evening.
Thanks, Thomas. Well, last time I spoke to you, and most of you were probably there to listen to it, I explained to you what the Australian Shareholders Association is. It's an association of volunteers. I'm the New South Wales chairman, and in that I'm responsible, well, I'm the liaison really from the members through to the board. And I'm not on the board, but we do have a board of directors of about, I think, 6 or 7, 8. My job, of course, is only throughout New South Wales. We're the biggest state, as you can imagine. We have a total of membership of about 5,000, with about 12,000 subscribers. A subscriber being someone that looks on the internet and uses some of the free information that we provide, but doesn't pay their membership fees. And of course, the association, I'm a volunteer. We do have a staff of about 6 people, the chief executive and 5 people that work there. And the main office is in Sydney, much to the annoyance of the Victorians sometimes. But the aim of the association is to, first of all, is to represent shareholders and to educate shareholders, 2 main parts of it. The one I'm going to talk about tonight is what we call the monitoring part. That's making the companies accountable to the shareholders. As you know, most companies, the retail shareholders, which we call ourselves the small shareholders, are only a very small shareholding in the company. The majority of the shareholding is held by institutions acting for the various companies, various investors, superannuation funds, etc. And the retail investors are only a small part of it. And often the retail investors are not looked after as well as they should be. So our job is in monitoring the companies is to keep the companies honest. We only monitor the top 200 share ASX 200 companies, not all of them. Some of them, of course, are LICs or are overseas companies, so we don't really monitor them. But I think we actually monitor about 168 companies, 168 companies, and we do them state by state. So, for example, New South Wales, we do all the companies that are headquartered in New South Wales, and Victoria does the Victorians, WA, etc. So we do the majority of them. I think we've got a majority of about 93 companies, I think, in New South Wales, and we have about 60 monitors to do the monitoring. We're always short of monitors. It's a hard job. You don't get paid, and it can be very sometimes very daunting to stand up before a a chairman and a board, and especially when you've got to ask them some embarrassing questions. But it's worthwhile, and I'll tell you a little bit how we do it. I monitor 3 companies. I've just done the 2 that I've done in the first session. Most of the companies, of course, report for the second half, and I happen to have these 2 in the first half, CSR and Spark Infrastructure. And I'll tell you a little bit how we go about doing the monitoring in a minute. It's going to be an interesting reporting season, I think, this time. The companies are all doing very well. They're all showing pretty good profits. You know, Commonwealth's already reported a pretty good report. Commonwealth Bank, Telstra, sort of showing a bit of improvement again after a couple of bad years, and most of the companies I think will do quite well. To just give you an example of what I just monitored, CSR, which is actually quite a good company. I mean, you can quickly judge how a company treats its small shareholders, its retail shareholders, by how they react to the monitoring process. Like most of the companies, most of the good companies would appreciate the ASA monitoring, because it does give them an insight to how the retail shareholders feel. I mean, they all report, they all sort of meet with the institutions, and so they know what the institutions are thinking, but retail shareholders sometimes they're not too sure what's happening, so they like to meet with us. Basically, for example, at CSR, which was a month or so ago, but about 2 months ago, when their annual report comes out, we send them off a letter and to say that we'd like to meet the chairman and discuss as soon as the notice of meeting comes out, which has got all the voting intentions, the emotions on it, we'd like to speak with them, and we arrange a meeting. And our CSR was actually good because it's just up the road from me and Ryde, and it was just after our lockdown. It's been a pretty quiet period, so it was nice to go up to CSR's office and meet with them there. The chairman actually is John Gillam, is in Melbourne, and so he came in on Zoom, or I think it was Zoom, and but the CEO and the company secretary are up at Ryde, so they were in the meeting, and then I had an assistant to assist me with the monitoring, and he had just had a knee operation, so he was on Zoom as well. So we met up at the office there and discussed what was happening with the year. CSR actually had a pretty good year, and they made good profits. Didn't require didn't take any JobKeeper, except in New Zealand. They were offered a bit of money from one of their New Zealand subsidiaries, very little that the New Zealand government paid. I think all companies a small payment, and they had a pretty good year. There was nothing really major coming up at the AGM. Mainly the usual thing that causes a bit of interest with AGMs is the remuneration, and but because the CEO, she's pretty new, she's only been there for a couple of years, she hasn't sort of got a really large remuneration package as yet, so it wasn't really controversial at all. So we meet with them, discuss, first of all, we have a table that we provide to our members in our voting intentions report, and it's to do with the salary of the CEO and various other things, and the return to shareholders, earnings per share, total shareholder return, etc. We tend to have a pretty fixed view of total shareholder return, which is basically increase in the share price over the year plus dividends. The companies, of course, some of the companies have a different idea. They use accountants' magic to change, to adjust the total shareholder return for various things. But basically, we just use the simple shareholder return, which is all we're interested in, is how much we got back. Once we've got that table, we talk to them and they have a look at it. The CFO gets onto it and has a look and make sure it's they agree with it. And then we put out how we intend to vote. Now we have proxies, most of our members, and you don't have to be a member to give your proxy to ASA, so we'll talk about that later. But we tend to get a fair few proxies, and I think at CSR had a couple of million, and we will vote those proxies according to the way we have decided. The monitor has decided that the motion should be voted on. Now, if you give your proxy to ASA, you don't have to accept the way we're going to vote at the AGM. You can actually direct your proxies and say, I want to vote for this, this, and not for that. And that's quite okay. But basically, we look at the way we want to vote. In this case, at CSR, we voted for everything. Now, I think one of the proxy advisors voted against one of the motions. It was the motion to do with allowing electronic meetings or electronic communications and meetings. And it was just an amendment to their constitution. And we didn't think it was a big problem, but obviously some of the proxy advisors did. So once we've worked that out, we tell the company how we're going to vote, so they know we don't like to surprise them. And the AGM this year was, of course, online, which most of them have been this year. I think they got a few early this year, where they got a few away that were not online. But this one was, and if they run it well, it runs quite well. Some of the companies do not run their online meetings all that well, probably because they haven't had to do them. But this one, CSR's went quite well. The trouble with an online meeting is that we asked a couple of questions, but the chairman can decide which questions he or she likes, and they don't have to ask that question if they don't feel like it, which is one of the big problems and why ASA is vehemently against online-only meetings. The companies, of course, like the online meetings because the chairman likes it. It makes it easy for him or her. But also, it's a hybrid meeting is very expensive to run. You know, the old meetings at the hotels, all the shareholders, mainly the retired ones, come in and have a nice cup of tea and a bit of lunch and sandwiches provided, and that sort of thing. But and you could talk with the directors and the staff, which was good. But if they go for a online only meeting, ASA would be vehemently against it. We've also been lobbying the government, and I don't think they will. They'll make it hybrid. The companies, of course, don't like the hybrid that much because they're expensive, as well as providing a hotel and everything else. They then have to provide the electronic service. And most of the companies use a company called Lumi to run their meetings, and it's quite good, but it's quite expensive. So we're going to be pushing hard to make sure that they either have hybrid and keep the normal AGM in person going, so that, because for ASA, it's very important for us, because that's the time when we can get up in front of the meeting and ask a question. And not only does it provide answers to our questions, but it also advertises ASA. Our members love it when the monitor gets up and asks the chairman or chairwoman a difficult question. Most people don't ask questions at the meetings. Very rare to have any other questions other than the ASA person there. Sometimes we used to have an old fella called Jack, I've forgotten his surname. He used to go to most of the meetings, and he was a real character. He died a couple of years ago, and he used to get up and demand this and demand that and castigate the chairman and the chief executive, and he was very funny. Sometimes he was a bit over the top, but Jack used to go to just about half the meetings. I always remember him once at at a Qantas AGM down in Canberra, and he got up and he said that he was going to give points to the chief executive, it was Alan Joyce, and he said, I'm going to give you points for your performance this year, Mr. Chief Executive, and you get 3 out of 10. And it was terrible. And he raved on and on. Anyway, eventually, everyone laughed a lot, but eventually the chairman sort of had to shut him up. Anyway, poor old Jack passed away, and we don't have a replacement as yet, but maybe we will. So the meeting itself is important for us. It's also important for us to gauge the reaction of the other shareholders in the room. Most of the fund managers don't attend. They just pass on their proxies, but a couple will, and sometimes there'll be some interesting questions. What we do have at the in the monitoring department, we have a lady who's the head of policy in the monitoring department for the ASA, and she oversees all of this. So obviously, when we monitor makes their recommendations, does their voting intentions, they submit it to the team leader. The team leader then goes through it, submits it then to the monitoring head of monitoring, or what we call the company monitoring chair, and then it goes to him or her, and then it goes to Fiona, who then approves the final voting intentions and then puts it up on our website. So only only members can see the voting intentions, and they're interesting. More interesting is after the meeting, as we then have the AGM report, which when the monitor reports on what happened at the meeting, what did we vote for, did they get up? The percentages generally they're pretty high, but if there was a strike, which often happens, that a strike is when more than 20, it's only on the remuneration, and if 25% or more vote against it, then they call that a strike. And if the company gets 2 strikes in 2 years, then the board is spilled. Generally doesn't happen, but it could. So the monitor then writes up the AGM report, puts it on the website for all to see. Now, investors find the AGM reports, I think, very interesting. Not so much when to buy a stock, but when to sell it. If you see the monitor's pretty close to the company, there's a pretty good idea what's happening. So if there's a bad report at the AGM report, then it's sometimes a good reason to think about selling your shares. The company monitoring committee meets quarterly, and in each state, sometimes more, when we also have training sessions, because most of the monitors are not necessarily accountants, or a lot are, but some aren't. And we run the training sessions. Fiona, the policy manager, she runs the training sessions for new monitors, because we're always trying to get new monitors, because we're always short of monitors. And the monitoring manual, which is our Bible, is changed and updated regularly. And we also have what's called focus areas. And that's where we generally write to the chairman before the AGM to tell him or her what this year's focus areas are. This year, we're looking at directors' skills, directors' workload, remuneration for companies that actually took JobKeeper. And one of our big things this year is to ask the company directly how much they paid, how much they received from JobKeeper, from the government, for various JobKeeper type arrangements. And if the company has made a good profit and is paying remuneration in terms of incentives to their key personnel, then we ask them, are they thinking about paying the JobKeeper back? There's quite a few companies that have received large amounts of JobKeeper, and have not paid it back. Them being probably Jerry Harvey at Harvey Norman, who wouldn't pay it back anyway. I think Myers, not Myers, Solomon Lou received quite a bit and won't pay it back. Most of them have paid it back. And a lot of companies, fortunately, the two companies I monitored earlier this year, Spark and CSR, took no JobKeeper at all because they just continued as normal. They didn't need any assistance. Their staff all remained fully employed and working as normal. So that's been an interesting one. ESG is always becoming more and more interesting amongst the companies. ESG being environment, social and governance. The companies, the ASX companies picked on this really early and started to do something about it. They realised that they could be held accountable for not complying. And if you look at the reports nowadays, most of them have probably about a quarter of the report is on ESG, and they're telling you how good they are and how much they're doing in this area. And it is important, especially the environment one, which gets a lot of interest. And the main thing, of course, is at the AGM, you'll have activists coming along these days, and we'll try and pass resolutions, which they generally don't have much luck with, but they try to make a bit of a stink and perhaps get some publicity for what they want, especially if you're in the oil and gas industry or hydrocarbon industry. You're going to cop it. Most of the companies, the ones that I were doing, Spark, of course, is heavily into renewables. I think 28% of their electricity production is from renewables, and CSR is quite a green company. They are pretty much carbon neutral. There's a bit in there, some of their manufacturing, of course, in cement and stuff like that, which is fairly heavily in use of hydrocarbons, but gradually they're reducing their CO2 output. So, as I said, we have last year we had $4 billion in proxies, and it's probably a good time to say to you that even if you're not members of the ASA, and I know a couple of people here are, but you can still give your proxy to the ASA. Best way to do it is online, but you can also fill in a form if you wish. And we need the proxies because the companies listen to us because we have a certain amount of vote. We are generally in the top 20 with the amount of proxies that we have, the top 20 shareholders. And the more we have, the more they listen to us. So if you want to give your proxy to us, please do. We're quite happy. And if you're not sure how to do it, give me a yell and I will run you through it. It's pretty simple. The other thing that Fiona, the policy manager, does is she meets with various government, ASIC, Company Directors Association, various people, the proxy advisors, etc. And she sits on quite a few government committees to put the ASA or the retail shareholders' view about changes to legislation, and that's a rather an important part of the ASA's job. Coming up to this year's reporting season, I've got one more to do later on in the year, which is Goodman Group. Goodman Group is probably it's a fantastic company. It's making very good profits. Share price is terrific. Shareholder return is great. Greg Goodman, the CEO, is probably one of the best operators in that business in the world. but he gets a huge remuneration. Last year, he got $26 million in long-term incentive. Long-term being, you don't get it until after a certain period, usually 3 or 4 years. And while Rega's much needed, the previous chairman is a lovely guy, but was pretty weak, and just sort of, there was no doubt that Greg ran the company. Anyway, he's gone as a new chairman this year, and we will see what happens, but I think we'll probably be the same as we do every year, saying it's a great company, you've done a great job, your ESG is terrific, but you've paid the CEO too much money, and we just can't accept that. I've noted already Goodman is providing loans to its staff to buy electric vehicles. They're pretty much completely carbon neutral with their factories. They've all got solar panels on the roof, so all the power's provided by solar, etc., and batteries. And of course, they're an international company now, Australia being only about a third of its worldwide operations in logistics and so forth. You see the green sign around the place in the industrial areas. They've been a great company. So we'll see what happens later on in the year when they put out their annual report, but I think it'll be quite a good one. So with that, I think I'll just leave it if there's any questions.
Oh, before we go to the questions, Richard,
yes,
I would like to just make a few comments on some of the things that I heard, because I was struck by the similarities of the organizations that you were talking about to what's going on right now with our little Rotary Club. It seems to me that we're facing many of the same issues. For example, you mentioned that one of the companies is having to amend their constitution to take on the situation of electronic meetings and that sort of thing, in much the same way that we're having to amend our bylaws to take on updating our way of doing business in terms of electronics and online meetings. The question of hybrid meetings is also something that we're addressing and struggling to address as well. And you mentioned that one of the focuses was director skills and director workloads, which is something that as the president of our organization, I'm always working to try to balance our director skills and workloads. But the thing that I found the most interesting was your early comment about the fact that one of the ways that you found that companies took what you were doing seriously was how they reacted to the process. And I want to really put a very strong endorsement for that kind of thinking, because good organizations now today in their CRM are always looking to improve their monitoring and feedback process and to make immediate adjustments as a result of that. And we as a club are working along the same lines when I ask for feedback, and we're going to be working a lot more with using online monitoring and an opportunity for our club members to give us feedback that we will respond to in like and similar fashions, hopefully in an immediate and effective way. So I want to thank you for that discussion. I quite candidly, I never thought very much about the impact of small retailers because I'm so used to dealing in the world of large institutionals. But I can see that what you do is really, really needed. And I think it's amazing that people take it on as a voluntary pursuit. It's hard work. So with that, I'll open the floor now to any questions of anybody that has some thoughts and questions of Richard.
Ken.
Thomas? Richard, where the board has a high percentage of women, do you find that the companies are actually performing better? Is that something that's really taking hold in recent years? Where some companies, you know, have maybe 10, 20% representation and others have 40 to 60. In your experience or your colleagues' experience, have you found that's a real success factor in their moving forward in today's world?
Well, we have a policy. We'd like to see 40% female representation on boards. There's not very many companies that are up to that yet. There's a few. They say, the researchers say that companies with high levels of females on the board are more successful. I don't really know. I don't know how they say that. A lot of people, of course, will say then that they'd like the best person on the board, whether that be male or female. And a lot of them don't want. A lot of women say they don't want, minimum amounts of females on boards because it means that then they have to say, well, they don't get the best person. But most of the companies are very much aware of it. Spark didn't have anyone, well, had one woman on the board and she left, she retired, and they put a bloke on and they were most apologetic about it, but they said, this guy's so good, we need him, but we have got another woman in line, and then since then they put 2 more women on the board. Spark is actually a fairly well-run company. But yeah, it's hard to say, but the statistics apparently say that with high levels of women on boards is good, and the company does run well. And there's some impressive women around that are sitting on boards. You know, the chairman of Commonwealth, Catherine Livingstone, she's a very impressive woman. I think it's as long as we can try and get, the trouble is there's not enough women in executive roles to enable equal representation on boards, because, you know, most board members come from senior executives. For example, at Goodman Group, pretty low numbers of women there and very low numbers of women in executive roles. And when I've pushed the chairman on this year after year, he says, the previous guy said, people don't leave Goodman, they stay with it. I mean, it's such a fantastic company. They're very successful. Every staff member of that company is on the company remuneration scheme, so they do get shares in the company. As I said before, they're offering subsidies for their staff members to get their company cars to be electric. So people don't leave. So it's hard to get sort of women up through the ranks to end up getting there. But I think, yes, I think you're right.
Yeah.
The ones, the ASA, of course, is pretty much 50-50 women. And so we have a strong lobby group, and a couple of our younger monitors, female monitors, are very much into making sure that women get their way on board. So I think we'll finally get it in the end.
Yeah. Supplementary, if I may, the mix of talent on the board. Now, is that something that you monitor or you dig down to in that extent? You know, do they have too many lawyers, too many accountants, or
yes, absolutely,
funeral directors or whatever, you know?
Yeah. No, it is. And you often, for example, the best one is Telstra. Not so much now, it's improved a bit, but 2 or 3 years ago, I don't think there was hardly a technical person on the board of Telstra. You know, here it is, a hugely technical company. Very important. And the companies now, when they select directors, they use contractors that specialise in selecting directors. They will certainly use people so that they do have a good range of male, female, accountants, lawyers, and more importantly, people that are operational in the company. So yes, they do look at that, and we do look at it too. Yeah, Chris.
Richard, I think it's a magnificent role you've got, and congratulations for being so courageous, sitting across the table from CEOs and chairmen who sometimes can be extremely powerful in many ways and intimidating with that as well. So I think it's magnificent what you're doing. And I had once a really good chat to Stephen Mayne, who quite likely is known to you. Oh, yeah. Because he's one of the guys, one of those journalists who obviously has teased boards to an extent that they really were close to killing him. But so it's extremely exciting to see what you need to be aware of, what you need to look at, and I'm quite interested in the monitoring you do, because that it can be as complex or as simple as you like, but it needs to be extremely meaningful. Do you use any external analysts? And I mean, there are lots of analysts always looking at the monitoring of especially the 200, the ASX 200. Do you use those guys? And that's the first question. And the second one, can you see that AI, artificial intelligence, can come into play for you as well with the monitoring of what these guys are doing?
We don't really use the analysts, although we do listen to their. If you're talking about people that are doing the analysts of companies, we do obviously look at them because we're interested in other people's opinion of these companies as well. AI, bit early for us yet, but it'll come. Nothing surer. I haven't. What are we going to do? Have analysed the board as they sit up there at the annual general meeting with cameras on each of them, and yeah, but it'll come. There's nothing sure. I mean, AI is going to be pretty big all around, isn't it? But at this stage, we haven't done it. And Chris, I hope when you retire that we can get you into the Shareholders Association, maybe to do a bit of monitoring, because your background would be excellent for it. So keep it in mind when you retire. I don't know how long you've got to retire, Chris. You're probably too young, but that'd be good.
Thank you, Richard. Appreciate that.
At least join the association. Yeah, it'll be interesting to see what happens in this AI field in what we're doing. Haven't worked it out yet, but have to talk to some people about it.
Well, thank you,
David. You're muted, Dave. David Matura.
Oh, okay, yeah, thank you, Richard. I've heard your speech. This is my second time to hear it. Recently, I've been attending a lot of district meetings, and I came across, I think, only 2 or 1 Rotary club. And because you are doing this work as a volunteer, there is a Rotary clubs that raise a lot of money. I know there is one in towards Camden raises like $1 million from the ball, and they put all their money in the shares. So there is a club that puts money in the shares, and all it spends is the profit. You know, like when you are sharing, companies are doing very well. Now you are not our treasurer. Why don't you volunteer and talk to Rotary clubs, even like King's Cross, to start investing in these shares? Because you are an expert, and make sure that we don't lose our money, so that instead of doing fundraising, we can have this share investment, raising the money. And that's what most Rotary clubs are doing. I might find out which one, and I'll let you know. Yes.
I think we should be spending the money, not investing it. But it's a fairly tenuous area, investing in things like the share market and stuff. For I'm a member of a golf club, and we had a fair bit of cash. We sold some land that the golf club owned, and because interest rates had been dropping, And so the board at the time, I wasn't on the board, but one of our members is a very wealthy man, and he said, "I tell you what, he's probably one of the largest shareholders in Commonwealth Bank. You might know who he is." And he said, I'll invest the money in the share market for you in Commonwealth Bank and a couple of other pretty good stocks, and I'll pay you more than the dividend because I get the imputed credits out of it, which the golf club doesn't get. And it was a great way it did. The share market went up, the golf club did well, but the new board came in and said, "Oh, we can't be doing that," and so they stopped it. And now the money's sitting in the bank earning, 0.5% or something like that. But there is often a line of contention when you're investing money. People don't want to lose the golf club or the Rotary club's money, so they tend to be fairly conservative with it. The best way, I think, David, is to spend the money on projects and get rid of it and not accumulate too much. It's my opinion. Yeah, Pete.
Quick question, just building on that. Back in my old KPMG days, we used to have a lot of issues around, I suppose, conflicts and managing that. So we obviously things like arm's length transactions, insider trading, and things like that. Do you have any of those kind of aspects to your role? Obviously, you're probably privy to some fairly sensitive information. And how do you need to manage that, or do you need to manage that?
It's pretty rare that we get sensitive information. Board members and senior executives are very careful now that they comply with this ASX rules and regulations, and certainly ASX regulations would be they wouldn't give us anything that is not publicly available.
Okay.
We'd like to get some. We do, in the other parts of our organisation, other than monitoring, we have educational and investment groups that meet a lot and discuss their shares, and of course get people in, advisors and analysts and people in to talk to us, and they recommend, or they talk about things. Everybody has, and we do especially, we have a disclaimer. We're not financial advisors, we don't have a financial license, and therefore we can't give advice. We can just give you information, and you take that for what it's worth. So we have to be careful, but I very rarely ever get anything from a senior company member that's not available to the stock exchange and to the general public. Much as I'd like to get some inside info, but these days you've got to be very careful.
Yeah, thank you.
Well, with Warwick.
Richard, very interesting, excellent talk. I'd just like to talk about job seeker, and in particular, good companies like Toyota paying back their JobKeeper monies. But as you said, like Jerry Harvey and Harvey Norman and Nick Scali and Solomon Lew, etc., not paying back their JobKeeper monies. So that's inflating their, I guess, profitability, if you like, and I guess they're also paying their executives a big increased amount of money. Or is their money going into paying dividends? So by default, is the executives and the shareholders making money at the expense of the government stroke the people?
Some are, Warwick, yes. I mean, our favourite company in this commerce is Harvey Norman. Jerry, I think, generally refuses. We used to have he's now our chairman, who was the monitor for Harvey Norman, and it used to be a battle between Alan, our chairman, and Jerry, and at the annual general meeting, and he generally has always had problems with the monitor. It's always a lot of fun when you get Stephen Mayne attending the meeting. He doesn't because it's always in Sydney and he's in Melbourne. But when Stephen attends it, there's usually a good old fight with Jerry and Stephen, which is fun to watch. But Jerry's, Jerry's Jerry. He's the largest share. He's a very large shareholder in the company. His wife's the CEO, and he usually used to kick or try and stop our monitors from even asking questions. Anyway, I think we've the new chairman the previous chairman actually did a bit of ASA. It made an arrangement with Jerry that we'd send someone along who was not quite as feisty perhaps as Stephen Main or Alan Golden, who was the monitor at the time. But we always enjoy watching a meeting with Harvey Norman, the AGM, but their governance is pretty terrible. It's not good, and you wouldn't buy the shares hoping that their governance is going to stay good, because it's not. It's pretty. But we've had a few wins over the years. We've made quite a few changes. I mean, the classic case of the way that the companies would give nice big bonuses to their executives, senior executives, is by giving them an amount of money in shares and valuing the shares at a much lower price than the actual market price. And they used to use, accountants' methods of valuing shares and taking into account the fact that tax had to be paid, and some of them didn't get dividends until they were because they were escrowed for a number of years. But we've managed to pretty much now just about all the companies value their shares at what we call, at the average market price for the last 5 days, or a time before the annual general meeting. They used to call the old method of doing it fair value, and it certainly wasn't very fair to the shareholders. But now they pretty much all do it on face value. So we've had a win there. It's slow, but we get a few wins over the years.
Okay.
So, mate, is that okay? Thanks, Thomas. If no more questions, I'll hand back to you, President.
Richard, I do have one question. What is the barrier to Chris becoming a monitor right now, or some of the other bright young guys that we have in the club that really understand the financial insides of things?
Well, nothing really, except that he's probably too busy at work, because it does take a lot of time, and most of our monitors are retired. A few are still working, but most of them are either early retired or retired, and because it takes a fair bit of time, and I mean, you've got to go, first of all, you've got to go through that report, and if you know what annual reports are like, they're pretty thick, and there's some interesting reading there, and all the important parts are in the small type right down the bottom in the notes. So you've got to spend a bit of time working through it. So generally the people that are still in business just don't have the time to do it, so they tend to leave it until they retire to take on the job. Do you agree, Chris?
Easily.
Yeah, I mean, you'd be most welcome if you wanted to.
Yeah, look, I think it is extremely interesting, and it might actually come quite natural for me. But honestly, being a non-executive director plus running my own show as a management consultant and acting as risk and internal audit head for various clients, bit of breathing space might help. Maybe I should actually stop doing Rotary.
I don't think that.
Well, you can certainly. There was a good point about artificial intelligence, but actually, there's also lots and lots of increasingly, there's lots and lots of data analytics and other tools to help us get through these annual reports actually quite quickly, and to draw comparisons through data insights with other like organizations. So as my father used to say, if you really want to see what's going on with a corporation, skip the report and go right to the footnotes. And that was sort of his shorthand way of saying the really good stuff is in the footnotes, the stuff you need to pay attention to and always need explanation. So,
That's for sure.
Richard, yeah. I'm sorry, go ahead.
Yeah, no, I agree with you. Yeah, I mean, when I was doing my financial management course, Jeff Wilson was one of the lecturers, and Jeff used to say, don't worry about, like your father said, don't worry about all that. He said, just look at the footnotes, the small print. That's where the interesting stuff is.
Richard, could you talk just briefly about the kind of training it takes to get to the position that you're in? I mean, is there a regular training course and a certification for this?
No, there's not really, and there should be. In fact, I was just talking to the CEO about it this afternoon, that we should probably do it. But I mean, the trouble is we have difficulty getting people to do the job as a monitor. And as soon as someone shows an interest in it, I mean, if they're an accountant or a business, had a lot of experience in that, well, then it's pretty easy for them to, for example, as Chris said, it'd be easy for him to come in and start monitoring. Generally, we just bring them in. We run, as I said, we run courses 3 or 4 times a year. Really, it's just a course in what we're looking for, how we do the job of monitoring. Mostly people would have a background in it and in finance, accounting or whatever. And but basically, they are then attached to a monitor and become the assistant monitor for a while until they feel comfortable enough, and then they take on the role of monitoring a company on their own.
Mm-hmm.
But it's not, there's not a real course to do or anything like that. It's, if you put your hand up, we're always welcome to come in, have a look, see how it goes. We have a fair rate of people that fall out, mainly because, if they've been working, as I was saying with Chris, if they're in a job, we've had quite a few monitors that were in senior roles, but they quickly find that either they change jobs or they find there's a bit of a conflict there, or they just don't have the time to do it properly, so they tend to fall away. But one thing we probably got to do at some stage, then if we do that, we probably find it doubly hard to get people to join as monitors. They have to go through a course and pass an exam.
How long have you been doing this, Richard?
Since I retired, about 10 years. Yeah.
10 years. That's great. You obviously enjoy it.
Yeah, it's the monitoring's a bit like hard work, reading those reports and so forth. And I'm trying to ease off in it a bit. I did previously was doing 4 companies. One's dropped out of the ASX 200, which is good. So I still go to the annual general meeting, keep my eye on it, but we only effectively monitor the top 200. But we do go, if someone's interested in a company, and we can collect the proxies and they can go along and vote the proxies at the AGM if they wish. But I'm down to 2.5 now. I'm only just assisting on Goodman. We're always short of monitors, so trying to retire is doubly hard.
Well, I'm hoping that this evening maybe you put the idea in somebody's mind that this might be an interesting pursuit.
Yep, and give us
even if you just took on one company and you had a regular practice. I think it would be an interesting experience.
A lot of people do it for that reason.
Yeah.
Mark's got a question there. Right?
Sorry, thanks, Richard. Fantastic, thanks as always. Did you say Greg Goodman was leaving as the CEO?
Oh no.
So he's still in there.
Oh yeah.
Keeping going.
No, he's not. No, the chairman left. Ian Ferrier, the accountant. He was the chairman up until last year, and I've forgotten who the new chairman is. I think I've forgotten who it is. I haven't had a look at it yet. But no, Greg, I don't think Greg won't leave. He's He's part of the furniture there.
Yeah, but they're in reasonable hands, you reckon?
Oh yeah, no, he's a good operator. Very.
Thank you.
Thank you, Mark. Richard, on behalf of the club, I want to thank you for a very informative evening. Things kind of snowballed this evening in the sense that we thought it was going to be about a 35-minute talk, and it's now about 5 minutes after the hour.
Sorry.
So I want to thank you again for an insightful discussion, and thank the club for some good questions.